This week, Ben and I are going to talk about a couple of different sets of USDA numbers along with some biofuel discussion. Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. Ben, how's it going?
I'm doing great. Happy April,
Happy
Will. And
April. Yeah,
yes,
yeah.
can you believe that a fourth of the year of 2025 has already passed us?
Both yes and no. It feels like it's been a mad sprint, but also it feels like we kind of teleported here. So
Spring is right around the corner. It feels great. I don't know, for our listeners out there, if anybody ever wants to submit comments, I'm always willing to take comments. But this week, I'm really interested to know, especially for like our Missouri listeners, how planting's going. There's pockets of Missouri that I understand are done at this point with corn planting. So if people have thoughts on that, please let us know.
for sure, for sure. And that's one of the things we will get to today, a little bit on the acreage side of the planting discussion. But before we jump into that, Ben, I just have one question for you. How's your bracket looking?
Oh, it kind of crashed and burned Saturday. I was in the top, 0.1%
Yeah, so Mr.
Saturday.
Economist over here was at the 99 point, like
Yeah,
9 percentile, just, hammering them
I
out.
was doing great. I picked Texas Tech over Florida. That was the pick I had in my bracket, and I also had Michigan State over Auburn, and they both lost. And so
Well,
crashed and burned.
they both had their runs, especially that Texas Tech collapse was pretty brutal.
Yeah.
But talking about some brutal collapses, they didn't really hit the market too bad. So give you a quick rundown on the week. We did see a lower corn price for both May and December. May down 11 cents at 453, December down 9 cents at 442. Just as a reminder, this is as the close on Friday, so this doesn't account for the early week shifts that we've seen so far this week. Looking at soybeans for May, up 14 cents on the week at 10.23. November beans up 22 cents at 10.29. Soybean oil on a cents per pound basis for May, up 3.15 cents at 45.16. Soybean meal by the short ton for May, down $6.80 at 293.50. That May wheat crop down 30 cents at 528. May cotton up 1.63 cents at 66.90. Looking at rough rice futures for May, up 0.095 cents per counterweight at 13,515. Looking at that West Texas Intermediate crude oil contract, up 91 cents a barrel at 69.28. So, Ben, looking at the futures here, we had some swings through midweek last week, but a lot of corrections came Friday and Monday. What's your takeaway as you look at what happened?
Yeah, do you like how I slipped that rough rice in there?
Yeah, I was not expecting that.
I should have given you a heads up ahead of time. That came from listeners for a couple of weeks now. I've been getting requests to add more rice to this commentary. We are in Missouri. I do serve the state of Missouri, so I understand why I was getting a rough rice request, but I've learned a lot through that process. So thank you for bearing with me on that. Yeah. So your question about how these markets are operating relative to expectations. I think last week, and we're going to get into this in the planning discussion here in just a second. So I'm kind of foreshadowing, but I think last week there was a lot of momentum in terms of the money in the markets favoring more corn acres. And when you're dealing with the U.S., where we don't have a lot of added acreage to add anywhere else, like we can't bring a lot of additional acreage in, added corn acres is going to come at the expense of less soybean acres. And so I felt like all of last week, and I really, really kind of just kept hearing the same things over and again that really, cemented this thought of the market was adding even more corn acres than what the average trade guest was suggesting, and fewer bean acres than what the trade was expecting. And that's why we saw that weekly shift of weaker corn prices and higher soybean prices. Those kind of corrected themselves Monday of this week when we got USDA's prospective plantings report, because while it showed higher corn acres, I don't think it was as much as what the market actually was anticipating. So you could make the case that the trade estimates really weren't accurate this go around, or they truly, maybe they were accurate for market analysts, but they weren't accurate for what the managed money and the sentiment within the market was expecting.
Well, Ben, just looking at that adjustment, USDA is pinning that corn acreage at 95.3 million. And I believe that's about 5 million up from the previous expectation, or maybe some general expectations that are out there separate from USDA. But looking at that, you talk about that pulling from the soybean acreage quite a bit. How did you see the reshuffling of maybe some of these, other crops, other commodity crops that are maybe operating on the fringes of corn and soybeans at times in the Midwest?
Yeah, so up 5 million year over year, but up a million relative to expectations. So your comment about fringe acres, I think, is very relevant here. Nearly every crop wanted to keep giving their acres to corn. I've talked about this multiple times. The one area where let me go back. I think that is very true for a lot of crops and a lot of fringe acres. We saw a cotton number that came in below 10 million acres of planted cotton. That's the lowest cotton acreage number since 2015. Cotton was trying to give some of its acres in the panhandle of Texas and Arkansas and Georgia, trying to give some of its acres to corn. We saw the wheat number come in down pretty much across the board. The winter wheat number especially was down. All wheat was down, basically 1.1 million acres relative to expectations, down 1.6 million acres relative to what USDA had pegged back at the February Ag Outlook Forum. So spring wheat acres, winter wheat also was kind of giving up some acres to corn. But the one crop that held in there that, again, I kind of remain a little bit surprised by is sorghum. We actually saw sorghum acres increase year over year. And certainly as I think about sorghum and why that might have been, it is dry out west in Kansas, Oklahoma, Texas. It is dry. Sorghum markets aren't great, but it's a crop that performs well in dry conditions. And so for people that have cattle or livestock and need to come up with some feed use, sorghum maybe is a good option for those producers. And that's why we saw them keep planting sorghum even with pretty soft and negative returns for that market.
Well, Ben, looking at some other USDA numbers, looking at the stock numbers, we saw a tighter corn and soybean outlook and a little bit of expansion maybe on the wheat side. But really, this was heavily in line with expectations, almost zero surprises there. What does this signal to you when you're seeing maybe that tightening of the corn and soybeans as we move into the planting season, but yet that expansion on the wheat side?
Yeah, all great questions. There's a lot of ways we could go here. I'll start with your question about what does this signal as we move forward. I think it keeps our old crop fundamentals, especially on the feed grain side, wheat and corn, pretty tight, and probably keeps those local basis levels elevated. The wheat stock number did grow 22 million bushels. Or well, I guess it grew 148 million bushels compared to last year at this time, but 22 million bushels higher than trade expectations. That's not really a telling number either way, right? Like it's yes, it's up, but it's nothing to get worked up about across the board. So I think feed grain stocks remain relatively tight and support those basis levels. That's I guess what I would say what it means right now. However, I do want to point out that I think the corn stocks number coming in as expected and really comes after a solid second quarter of corn use. I think it now validates that 3.8 bushel per acre drop that we saw in the national average corn yield back in January. When USDA made that reduction, it was because the December 1 stocks report came in a lot lower than expected. USDA said that we don't have as many stocks on hand, therefore we must not have had as many bushels or production as what we did in 2024. So they lowered that number. There was some chatter out there that stocks report maybe was a victim of data error, data collection error or whatever. And so there was quite a bit of, I think, skepticism that maybe the March report, the stocks report, would signal, hey, we have more stocks on hand than what we thought. So maybe the 2024 crop was bigger than what we thought. And we need to increase yield. I think this just validates that that drop in yield was justified, and that I don't, at least right now, I don't see any more changes to the 2024 yield coming or adjustments that need to be made to last year's production.
Well, Ben, shifting off of USDA numbers and with a little bit of time we have left, just want to kind of point out that April 2nd could be a big day. We're recording right now on April Fool's Day, but April 2nd could be a big day for tariffs and what that might look like on the U.S. placing tariffs and then seeing reciprocal tariffs on things. So the Trump administration has said that April 2nd is the day to watch. Ben, from a commodity standpoint, are you expecting markets to react very much one way or the other as news kind of develops?
Yeah, so I guess first point, I hate April Fool's Day. I don't know why this is a thing. And second, I'm
Well,
glad they.
it's because this used to be New Year's Day, and then when the calendar changed, those who still celebrate on April 1st were then called April Fools.
Oh, interesting. I didn't know this. Okay, well, anyways, I learned something today. I just don't like the holiday. It's not that I'm gullible. It's just that I'll see something and I spend way too much time trying to decide if it's true or not, and then I feel like I've just wasted an hour of time or whatever. So, anyways, long story short, but related to the tariffs and the impacts of the commodity markets, I have no idea what's going to happen. I've been very truthful to all my Outlook audiences. If anybody tells you they know exactly what's happening on the trade front, they're just blowing smoke at you. Here's my, I guess my thinking is, I don't know what's going to happen on April 2nd when all these reciprocal tariffs do or don't get announced, and if there's carve outs, or if maybe some countries get exempted, that so tariffs go into place and then they're like, no, we're gonna delay them another month, like what we have with Mexico and Canada. Mm-hmm. I don't know what's going to happen. I will say though that here is one of the things that I look at and say concerns me a little bit. One, U.S. tariffs on certain products and certain industries do increase the import costs or input costs for producers. That's one negative that we see there. The second thing is how countries retaliate to us. So I'll be looking to see what the U.S. does, but there's a lot of countries that say they have reciprocal tariffs ready, or retaliatory tariffs ready to be put on us again, and in response to our moves. And so those matter too. I have no idea what those look like. And so there's a lot of uncertainty here. We could see big shocks in the markets this week. I don't think anything is off the table. I think that's why we've seen managed money move into a very neutral position in the markets. And we'll just have to see how this week goes. But that's my long-winded non-answer, Will.
I love that. Sometimes the best answer is no answer or I don't know. But looking forward, Ben, to the rest of this week, what should farmers and ranchers be paying attention to that could move the markets?
Yeah, so a couple of things. Now we've kind of got through the end of March, and so we've got the planted acreage number that USDA is going to use in their May balance sheets. So certainly the April WASDE will be looked at and evaluated, but I think the next big thing for commodity market supply and demand comes in May. We've talked about the reciprocal tariffs announcements on April 2nd. That'll be I think that'll be something everybody will be watching for this week. And then we've got some economic data coming out this week that I follow just because I find it interesting, and I think it does impact us, probably more our protein sectors more so than the grain side. But March U.S. employment and hourly wages, that's the unemployment measure, comes out this Friday. Next Monday, April 7th, U.S. consumer credit report to get a gauge of the credit held by consumers on their credit cards, and then Tuesday of next week is the U.S. jobs openings report. So a couple of key economic reports just to be aware of, but I follow those more than most people probably do.
All right. Well, Ben, it's always a pleasure having your knowledge and information here on the program. Viewers and listeners, if you'd like to learn more about us and what we do, you can check us out at brownfieldagnews.com. Also, you can follow us on X or Twitter or whatever you want to call it these days. Ben can be found at Ben Brown MU. Well, Ben, thanks again. I'm Will Robinson on Brownfield.